As we begin our conversation here, and Josh, you know, we're here at this event and everybody's having a good time. It's a lot of financial advisors here who are going to have to give a lot more financial advice today because of what's happening in the market. I heard you say earlier, if things keep going like this today, you're going to have to be a buyer. And it just leads me to what the market's doing, whether it's overdoing it or if this is right, is what's supposed to happen.
So two things that I'm looking at right now, and I think a lot of people here are looking at right now. The 2-year Treasury, which I regard as the shadow Fed. The Fed will end up where the 2-year Treasury is for the most part. As long as that is doing what it's doing, I just don't think you're going to get stability in the stock market. Then you look at the 10-year, almost 3.5. When we were at 3.5 in June, it triggered that waterfall sell-off. And I think that is an area where stocks just, it's almost like an off-limits area. Now the VIX is only 26. The VIX could go higher. We've seen prints of 34, 36 on the VIX this year. That is the area, and I hope we don't get there, but if we do, that's what you need to have dry powder for. That's where you just have to say, you know what, I get it, I understand, inflation is hot, higher for longer, that's fine, I'm buying companies.
But see, I heard you say earlier, rather than, you know, when you came into the room today where we were all gathered before the show, it wasn't batten down the hatches.
No.
It was, first thing you said, hey, if things keep going like this, you got to be a buyer. I got to buy them. And we said, well, what would you buy? You said all of them.
Buy all the things. Look, here's the reality. If you were expecting a 7.9 on this number, and that was going to be the reason to have the Dow rally 600 points, which very conceivably could have happened, I'm sorry you didn't get that. But the reality is there's not that much difference between 8.3 and 7.8. All of these numbers are horrible numbers. So we know the Fed has to continue doing what it's doing. I think if your expectation was otherwise, if you were in this pivot camp, you really are going to have to get some religion right now because the prints are not going to be coming in lower. Next month will not be a low print. You've got to get that out of your head. The Fed is doing what it's supposed to do, but that process doesn't happen overnight.
So let's talk about, Steve, what the Fed may do next week. Hotzius, Goldman Sachs, just puts out 75 basis points coming next week, then 50, then 50, then 50. Yeah. Right, so everybody's kind of ratcheted up their expectations, as has the market. As you pointed out earlier, what was there, an 80% chance of 75 and a 20% chance of 100? Yeah. And that was earlier, and maybe that's moved a little bit too. But why don't you speak to what you think this means for the Fed?
I think that 100 is probably not going to happen right now. I think what I've been trying to say on this show pretty repeatedly, Scott, is don't get too hung up in the increments. Get more interested and focus on the destination. And that destination changed a bit today, but it's over 4%. I think it's been in and around 4% for a while. The Fed has to get there for a variety of reasons. If you do a very quick math, you take an underlying inflation rate of 2.5% or 3%. You say normally it should be a 0.5 point positive, and then you got to add restrictive on top of that. You get to 4% pretty quickly, Scott. I think that's really the key to think about here, which is that, and it wants to get there relatively quickly because today, the Fed is less restrictive than the market thought it was going to be. I'm really interested in this trade, how the market swings back and forth between, you know, euphoria and depression on one number. Whether or not that's the right thing, I don't think so. But during the break, Josh said something I think is really interesting about the hurdle rate. And if you don't mind, to me is something the way I think about the world, too. You can go into the market now and get a 2-year Treasury that returns you 3 3/4. And it's a 2-year limit on that. So if I buy it now, I'm going to be out of my trade in 2 years. That's a higher hurdle for stocks. So whatever you think the right thing to do with stocks is right now, you've got to look and base it upon your assessment of the risk-free rate. And that risk-free rate may go up a little bit. It may be 4% or 3 3/4, but it's gonna be there for a bit.